My name is Jim Perkins, and this is Alina SOLTYS. And she is a senior analyst at the Corum Group. We are an M&A firm based here in Seattle. We sell companies. We sell software companies only. We only represent sellers of companies. If some of you, and I recognize some of you from the last session, you've heard all about our process and how we do that and how we get the most value for your company possible. What we're going to do in this session is we're going to talk about the market, both the general software market and how well it's doing. And then we're going to get into specifics on the video game market, who's doing what deals, the value of those deals were, and some upcoming trends in the market that you may want to take a look at when considering development in the future. We also have some materials that you can pick them up in the back, or if you leave a business card, we will send you a copy of the presentation that we're going to give. We will also send you our World Tech M&A report, which includes a piece on gaming. We have an update coming on this report as well, which we'll send to you if you give us your business card. Either leave it with Tim back here or with myself. Just a little background. I'm from the video game industry. I now work in mergers and acquisitions with Corum, but I have 22 years in the video game industry. I started out doing CompuServe product. You may have recognized some of the products, Duke Nukem, Wolfenstein. I helped the Unreal team get started at Epic with their engine and with their games. So I've been involved in that. I've been an entrepreneur, software entrepreneur as well in terms of selling my companies. I've sold 2 companies that I started and grew to what I thought was a good level, sold them to public companies. So I've been through the process of what some of you may want to go through or will go through in terms of selling your company to a larger company. So again, leave your business cards. We'll give you a copy of the presentation. We'll get you this M&A report. And I think what I'll do is I'll hand it over to Alina now. Alina, you want to kick it off and tell us a little more?
Yeah, sure. Thanks, Jim. So to give you an overview of where we're going, I'm going to give a bit of a software overview in terms of valuations, some of the M&A environment to set the stage, and then we're going to go deeper into the gaming segments and what's going on there in terms of M&A and fundraising, and then Jim will touch on some trends. So if we take a look at just what's going on in the general public market, we've had a bit of a pullback in June and hitting a little bit below the January starting point, but now it's back up. And the reason why I bring up this slide is as long as the markets are positive or at least flat, this is helpful in terms of tech M&A and being able to do deals. Buyers have that confidence to go forward. The U.S. economy has been recovering somewhat. There is cheap debt out there. And the fact that tech innovation is so strong with social, mobile, gaming, cloud, SaaS, all of this is really creating a great atmosphere for the timing aspect. But unfortunately, if we take a look at the IPOs, those that happened in this first half, plus a few from the gaming world that were in December, you see a lot of red out there, and it's been a little bit hit and miss. Some values have dropped in half, others have doubled. There's a few that have been relatively flat. The 2 top ones are the gaming ones. So if we look at Zynga, it's been pretty hammered lately. Mark Pincus is saying don't pay attention to today's prices. We have a long-term strategy in place. But if we look at the very first one, Nexon, which is a South Korean company that's listed on the Japanese stock exchange in Tokyo, it's actually one of the 2 that is actually in the green. And they are makers of MMO games like MapleStory, and their margins are just incredible. Margins that Zynga would be very jealous of. And just to touch on the one that has the highest performance here, Guidewire Software. They have very specific solutions for property and casualty insurers. And of course, Facebook is on here after much drama and a much awaited IPO exit. They have finally done it. So if we move on into who is acquiring out there, and it's an impressive list of companies. Google is on the top, 33 acquisitions in 2011. That's pretty impressive. And thinking about the fact that there's a lot of implementation work that needs to be done after such acquisitions, they're very busy. Zynga also is very busy, doing acquisitions even during their supposed quiet period, pre-IPO, and they are on track to do the same this year, doing a lot of acquisitions there. And so if we look at this list, it's mostly US, European companies. What about the Asian companies? It's really astonishing to see the cash reserves of these Asian players. Typically, the roadmap for a successful software company in Asia is to IPO. There's little M&A activity as compared to North American and European companies. And so that's how they're able to raise such enormous amounts of cash. Half of these companies that have the little Game Boy symbol, sign of my childhood at least, they have specific strategies in gaming. And that is an impressive list if you look at the amount of cash they have, plus the fact that they are so focused on gaming. And we see, this cash being spent on acquisitions, on strategic investments. Japanese companies are moving into the US. Their markets are pretty full already, so they need to enter that next frontier. And the US is where they're spending their money. Baidu, which is the first one on the list, they just announced their Q2 results yesterday. And guess what? Their revenues are up 60%. Most of it is from search, and the CFO has made a stated effort that their next frontier is cloud and games. That's where they're going to be spending their money on acquisitions, on strategic investments. So if we move ahead, this is something that the Corum Group puts together, an index that we monitor monthly. And here is the aggregate of first half 2011 versus first half 2012. And if we look at the number of transactions, it's pretty on track with what was happening last year. The number of mega deals is a little bit less. If we take a look at these mega deals, although they are not in the gaming sector per se, I think there's two important trends that we can draw out of here. The first being there's two deals on here, Ariba and Talio, that were SaaS-based. And then there's two deals here that Logica's acquisition and the AboveNet deal, they are geographic-based. And so if we can apply this trending to gaming deals, the SaaS can, it shows the differentiated business model that companies have. And the fact that gaming companies need to be creative with the ways that they monetize and the way that they grow their revenue, it really shows to the higher value that they can provide for themselves. And the second point here is the geographic expansion. Once again, Asian companies are looking to get into the States. Geographic is a very important synergy there. So if we flip forward, Jim presented in his previous slides that private equity has a lot of money at play, and they certainly are doing a lot of deals here. And they're not slowing down. VC-backed exits, look at that. It's 3 times larger than it was last year. That's great news. And VCs like to invest in smaller, more innovative companies that are doing something exciting. And we're going to have a breakdown of exactly what kind of gaming deals that they're doing. And they're doing a lot of them. So here's another aggregate index of what's happening in the overall software market. And these are all publicly traded companies. They're based in the horizontal applications market, vertical applications, infrastructure space, internet, consumer, and IT services. So we're here comparing quarterly numbers going back over 2 years. And if we look at the trending, it's pretty flat from 2 years ago. We had a nice uptick in 2011 before the European crisis pretty much blew over and started causing a lot of panic and trouble. And that's where it is right now. So I'm going to walk through the 6 individual sectors real quickly. And the reason why I'm doing that is just to set the stage for, yes, you're a software company. Yes, you have a specific focus in the gaming industry. But as you'll see that even though those are pretty specific segments, each one has its own value drivers. Each one has a differentiated strategy for how it sells. And this is what I want you to keep in mind, that depending on where you are in the gaming sector, it also drives how much value you can produce for yourself. So the first one being horizontal, and this is actually the one that's the highest valued always because of its SaaS players. There's companies in there like Salesforce, part of the CRM. There's human capital management companies. There's ERP companies in there, and they're trading as of last month at 2.6 times sales or 13 times EBITDA. If we move on to the vertical applications, these are companies that serve specifically in healthcare, government, AEC as an example, and they trade slightly lower at 2.1 times revenue or slightly less than 10 times EBITDA. So moving into a segment that is more familiar to our audience here, the consumer market, we have the digital content space that has companies like Adobe, and then we have the video games subsector with companies like Activision, Glue, IGT, Shanda, et cetera, et cetera. And the interesting note here is even though these are large public companies, their values are pretty low. They're a lot lower than you would expect for your company at least, right? And that goes for the case in terms of the M&A transactions that we are seeing. These are not the trends at all. Private companies get a lot more, and Jim will talk a little bit more about the threats that these larger console players that are stuck a little bit in the old world are facing and how they're combating them going through acquisitions. And so if we take a look at a few deals here that have happened, the story certainly holds true for large companies like Zynga and Sony, who are doing acquisitions to adopt certain crossover strategies. They want to gain those users, they want to increase those retention rates. And Zynga, even though it was first out of the gate a long time ago, they're not standing idle. They acquired OMG Pop, which almost feels like it happened last year or something because it feels really outdated already. And many of us stopped playing Draw Something as the user rates declined. They're still continuing, though, with their acquisitions, and that is bringing innovation to their company. Sony realized a long time ago that their PS3 platform is no longer holding the ground, and they need to do something different. So they acquired this really cool company called Gaikai, which does cloud-based streaming of intensive games that you can carry on to any internet-connected device. So if you heard Paul's earlier speech, the keynote, they just announced their cloud strategy as well from Big Fish Games. And this is exactly what Sony acquired without having to spend all those months and man-hours to develop this solution. They just acquired it. Two more interesting deals. The first one deals with the mobile payment space. And mobile payments continues to draw attention from a select number of acquirers, Google being one of them. Google's building out their wallet strategy. And it's really impressive. The trajectory for mobile payments is expected to hit $1 trillion in 2015. And Google acquired, with this acquisition, 100 million prepaid debit card accounts, which they can just transfer over to Google Wallet. And then the other interesting company, from somebody into it, you don't really think about them as a cool new consumer type of company. They do QuickBooks. But they acquired AisleBuyer, which is an innovative company that allows retailers to set up virtual shopping assistants. So you can go into your local QFC, Whole Foods, whatever, and instead of standing in a checkout line, you can just check out with your phone. So it's really bringing the virtual world to everyday people. And if you think about the trends there, if a regular person off the street is ready to use something virtual, they'll be much more open to gaming as well in the virtual sense. So if we continue through the remaining three segments that we separate, infrastructure, they provide the network, the storage solutions to run the internet, as well as a lot of databases that support your companies. Multiples here of 2.4 times revenue, 10.5 times EBITDA. And just in case if that's not clear to everybody, the way that we calculate these multiples, it's enterprise value to sales. So the amount of sales that you have times 2. And the internet market here, this is everything from pure play internet portals to the actual internet pipes that make up all the connection and the data going back and forth. These are at 2 times sales or 10 times EBITDA. And then lastly, we have IT services. And these are the companies that provide staffing power to complete the various contracts that tech companies need out there. And some of the largest companies work with a lot of IT services providers. So if you have a company that has outsourced developers that produce games on contract for somebody else, this is a relative comparable. Typically, these companies do not have their own tech. They just provide the man hours, and their valuation is based on the immediate hourly work that they can do. So I've just stepped through the wider software segment space from a more macro level view, and I hope this gives us a platform to jump into the gaming segment in detail. So Jim, if you could continue.
Thanks, Alina. What is amazing to me is the relatively low public valuations of these consumer software companies, because it's not reflective of what's going on in the private valuations of video game companies. There's I think the technical term I can use to describe what's going on in the private video game mergers and acquisition space is wild. It's crazy. The valuations are all over the map, and there's no indication of that in the public markets. So that's a great indicator for you as potential sellers of your company to really go out there and build your company to the level that you want it at and sell to these larger companies. They need you and are willing to pay many times the multiple that they're worth on the public markets. What we're going to talk a bit about is about M&A and what's going on in fundraising in terms of companies that are out there raising money in the game space, what trends to watch for, what is Asia doing, and some predictions. So this is what the global video game mergers and acquisition space looks like. As I just said, it's crazy. 2011, we had almost 120 deals and had transaction values of almost $3.5 billion. It went way up, and you can see that with Zynga buying, and all these other companies buying, Big Fish buying, a lot of IGTs buying. These companies are trying to get into spaces and are very competitive and have the cash to pay and buy valuable companies. I'm sure that some of these numbers are already out of date, but this is the kind of activity we're seeing in the video game space. Facebook is certainly buying in the space. Definitely Zynga, we know about that so far this year. And this is just for the first half of 2012. Again, I'm sure there's more than this. Nexon buying studios in Asia. Tencent investing in Epic and buying Riot Games out of California. Great team. We made it also out of Asia. IGT, a big player in gambling and gaming. We're going to get into gambling and gaming in a minute because it's a very important sector, and there's these guys, these players like Zynga, IGT, Shufflemaster, all Wynn Casinos, all of them are betting big on this space, but I'll get into that in a minute. And they're making acquisitions to be a big player in that. So I'm going to hand it over to Alina, go into some more detail on that, and then I'll get into specific trends.
Yeah, so the sector that we have here, games, broken down into the subsectors, comparing them 2010 to 2011. And it's really interesting to note here the amount of payment-related deals in 2010 versus 2011. And back in 2010, when the market was really starting to heat up and nobody knew what was happening, Visa, MasterCard were in there doing deals, as well as Google jumping in and pioneering a lot of the deals there. But so far this last year, we've seen them hold back a little bit as they're figuring out what their strategy should be. And of course, online saw a massive shift in its direction. It's much higher than the majority. And let's take a look at how that compares to this year, this first half so far. We really see the fact that smartphones, that tablets are out there. It's really driving the mobile aspect of deals and the transactions. Zynga, Gree, Rovio, they've all played very heavily in the space, doing multiple deals. And then Nexon is doing a lot of the heavy lifting in the online space, doing a few deals there. But it's interesting to see that payments have really paused for this first half with just a few small pickups of virtual currency platforms and the like. So where do we see this going next is the question. And it's pretty amazing to see how quickly mobile is picking up. 50% of Americans have smartphones right now. And they're busy using them too. If you look at iPads, which are part of the mobile designation, take a look at that top chart. Red is from May of last year. Blue is from this month. A third of all iPad owners have 2 or more in their household. So I guess sharing is not okay anymore. And the bottom graphic really shows the increased portion of hours used by iPads. And I'm sure you're seeing this usage translated into the fact that your mobile games are taking off very quickly with the mobile aspects, just due to usage rates. So if we look at these charts, 70% of all iPad users have 20 or more apps, a third of which have 50 or more apps. This is really coming to another level of digital hoarding, and the data usage rates all point to that. More complicated games are able to run on next generation tablets that have better processing. The carriers are finally getting used to the fact that there's a lot of data being piped through their pipes, and these two charts really set up the stage for our predictions for next year, for 2013, and where we see gaming M&A going. So mobile picks up significantly. The fact that there's usage rates, that there's developers spending a lot of time, really shows that in the next few years we're going to see a lot of innovative acquisitions happening. Online, of course, continues its dominance as well. It's not going to be dropping off anytime soon. But really, the prediction that we're making is that payments are going to pick up again next year. And there's a few reasons why. Currently, Google is really one of the only dominant players in there. They're figuring out their strategy. And if you notice, there's one name I didn't say yet. It's Apple. Apple likes to hold back a little bit. They like to see how the strategy is developing before they jump into the market. And I think next year is going to be a turning point where they have to get in and lay the stakes for themselves. So if we take a look at one last breakdown for the M&A segment, this is by country. And you see a lot of countries represented here, 60% of which are outside the United States. South Korea, Japan, China make up a quarter of all these transactions. So this really points to the picture that it's important to know your partners. It's important to know that there's competitors across both ponds and to be able to work with them when the time comes for that next step. So Jim, if you could take over with the fundraising VC slides.
Thanks, Alina. Okay, I want to do a little bit of analysis here on the fundraising by sector. There were 79 disclosed transactions in the first half of 2011 versus 64 in the first half of 2012. Europe has been totally left out of the picture, either with 12 transactions in the first half of 2012. Okay. In the segments, in terms of fundraising by segments, online, obviously in 2011, was the largest. That reduced and mobile took over. It follows the exact trend that we've been seeing in our industry. And most of that fundraising obviously is for mobile. Fundraising by country, most of it again happened in the US. We are seeing some good amounts in the UK and a lot in Asia in terms of fundraising. Specifically in terms of game trends, and this is what we see happening and has happened, but we see continuing to happen in the games market. Acceleration in M&A. I don't think that the gaming IPOs out there are going to be as dominant at all, given the performance of some of the companies that did do IPOs last year. So that's going to really send the amount of M&A activity in private companies up. And as I say, the valuations, at least in the private companies, don't reflect even closely to what the public valuations are. this time. We're still going to see franchise blockbusters from the big box-based companies, whether they be Take-Two or Ubisoft or EA. But smartphone and especially tablet gaming are going to just go crazy. It's going to be the highest growth, even beyond, I think, for tablet gaming, higher beyond than in terms of smartphone. Social monetization, I think there's still a shakeout coming on the profitability. Who's making money on social games, who's not? What types of games are garnering the most revenue and the most profit? I still think we're going to see a lot of activity on that space. I also think with the emergence of, for example, smart TVs and video gaming, that we're going to see voice recognition becoming very, very important. No one really does like using those controllers. Motion detection is great if it's perfected, but there's a lot of activity over in Europe with smart TVs. Witness, PlayJam, one of the companies that I've been following. Just a ton of activity there. So I think from a voice recognition standpoint, if you've got technology in that space, you're in good shape and you should be talking to potential buyers or acquirers. All right. Now, here's some very interesting figures just to summarize this, some of what Alina said. 2011 M&A, $3.4 billion, up 160%. The number of transactions, up 88%. The average transaction, $30 million, most of which was cash, up 38%. Social games dominated. MMO M&A value, this really surprised me. 30% of the deals were MMO. Social mobile is here. You used to say it's coming, it's here. I mean, even as back as 3 months ago, I was saying it was coming. It's here. There's no question about it. Cloud gaming, well, we saw the announcement from Big Fish this morning. There's no question that cloud gaming is becoming critical. Playing a game anywhere, anytime, on any device, that game remembering where you were in the game so that you continue on that experience with your friends wherever you are. Is it too late for the console giants? Well, we're not sure what's going to happen with these guys. These guys are moving very slowly on the M&A side. There's a lot of rumors that Vivendi's selling at its $8 billion share in Activision right now. We think one of the likely buyers is Microsoft, but it could be one of the large media companies. There's a lot of cash being generated by Activision in this space, and somebody wants to get a hold of it. It could be Microsoft. Saw a lot of big steps with the Asian gaming companies. Gree buying into two very large, very, very good US-based companies, Funzio and OpenFeint, and Nexon taking a majority position in NCSoft. Very important move. Nexon is doing a great job with margins, especially in the margins, as Alina said. Some more M&A in Asia. Gree is obviously very active. WeMade. Many may have not heard of them, but they're quite active in the Asian market. They're buying up social game studios at the rate of one every 6 weeks. Nexon, obviously very active, again, buying social studios and also buying the majority position in NCSoft for online games. And NeoWiz, another company you may not have heard of, but very active in the Asian space. All right. So what does the online games market look like? I took a look at this. I just wanted to see, what are all the bases here for development, all the bases for market? And there's really, I think, 6. Definitely client MMO, social casual web, casual mobile, social mobile, browser MMO, and cloud gaming. So what does this all mean? What's going on in our industry? Well, it is a frenzy. There's consolidation frenzy for acquisition. Competitors are buying other competitors to increase their market share. And there's also complementary consolidation where they may be in mobile, but they want to get into MMO or the other way around. So there's a lot of consolidation going on, a lot of acquisitions. And there's companies entering the space that we thought we'd never see in this space. Now, Disney always threatens to be in the space, and they are making acquisitions, but then they pull back. IGT makes slot machines for casinos. They're buying companies double down for hundreds of millions of dollars. In Asia, Tencent's incredibly active, Perfect World and Nexon, as I mentioned before. Console, what's going to happen in console? I don't know. We see the big blockbusters and then that's it. Then they go on the closeout bin. How are they going to get into this space? How is a company like Take-Two going to get into this space? How is EA going to fare in this space? I think EA is faring quite well, but that is not reflected in their public valuation. It's not reflected at all. And then obviously the online mobile space with Zynga and Rovio and Unity Engine. My favorite topic, gambling in games. What's interesting here is everybody's investing in gambling in games, whether it be for fun, casual gambling, or whether it be for money. So gambling for money is legal in Europe and legal in many parts of the world, but it's not legal here in the United States, and it's not legal in China. And we may see a transition into that legalized gambling. Bally recently got granted a license to do legalized online gambling in Nevada. So you have to be physically located in Nevada to gamble online. But that is the start of a trend. Other states are looking to offer gambling, obviously for tax reasons, for money. So that could explode. I know Zynga definitely, in the comments that they have made, are putting a lot of money and a lot of time into building online gambling sites. Ones that, they dominate in poker right now. That's scaring a lot of their competitors, but they're going to continue to invest heavily in online gambling, whether it be for money or for fun. So if you've got companies that even remotely could offer a platform or a solution or games or variations on games for that gambling space, you've got some tremendous value. The other thing that's happening too is that the traditional, and I mentioned IGT, but the traditional casino floor companies, whether they be Harrah's or Wynn or Shuffle Master or any of the IGT, all these guys know that they've got to grab the customer after they leave the casino. They're losing their customer. They're going somewhere else. They're playing Zynga Poker. They're not playing Bally's Poker. They're not going to a place that has their brand on it. So they're thinking of all sorts of ways in which they can position themselves to be in that space. Critical to them is customer loyalty, customer incentives, look and feel, branding of the game so that a customer, my 80-year-old mother feels comfortable going to a Bally's site just as much as she feels comfortable going to a Bally's casino. She's got to know that that brand is a safe brand, and what I do online is connected to what I do in the casino in Las Vegas or in Atlantic City or whatever. So there's a lot of activity going on behind the scenes. Take a look at who the traditional gambling companies are hiring. They're hiring guys from Zynga. They're hiring guys from traditional Electronic Arts. They're really trying to get in this space. They're serious about it, and they're going to know how to do it because they have the expertise to do it. Mobile gambling. What are you going to do when you can play poker while you're on a train or in a bus or a passenger in a car? Great to play poker, great to play for money. I mean, obviously limiting to some extent, but these guys are going to be offering it on mobile, and if you got solutions on mobile, then you're definitely valuable. As I mentioned, customer loyalty is a big deal, very big deal. You know what's going on when you go into a casino. They've got your card there that measures how many times you play slots, how many times you hit the blackjack table, how many times you hit the craps table. All of that's going to be translated into what you do online. All right. Just before we go to some questions, we got some predictions. Obviously, this is strong. Mobile is strong going into 2013. The gambling issue is a very hot issue with high stakes. There's billions, tens of billions of dollars, hundreds of billions of dollars worldwide at stake. And these guys are using technology to establish brands with their customers. And obviously, we've seen for the first time, I think, at a rapid speed, Asia investing in the U.S. A lot of deals happening. These guys are stepping up to the plate. They're doing a great job of valuing these companies. And these Asian companies are making that decision more quickly than they ever have before. So those are some of the predictions. I think that will continue. All right. Let's open it up for questions. Anybody have questions, comments? John?
Do you think the next generation of consoles is going to have much traction? What are your thoughts on that?
That's a great question. I don't know if anybody heard that. John asked, do you think the next generation of consoles will have traction? Will they be popular? That's a hard one. I think they're going to be, I don't know what they look like, but from what I've heard, they're going to have some things that that are going to be really amazing. I think, but part of that, the threat could be Apple with the Apple TV and the next generation of Apple TV and smart TVs. That could really trump the next generation of console. If I got a smart TV and it's doing everything I want it to do for the whole family, do I have to have a console? Maybe not. They're going to capture a large portion of the audience. There's no question. Any thoughts on that? Does anybody have other opinions on the next generation of consoles? Microsoft guys in the audience want to reveal anything? All right. Other questions? At the back.
Do you see any activity happening in customer acquisition or distribution of games?
Could you clarify that?
Just how game companies are acquiring users, getting them to download the application either onto their desktop or onto their mobile.
Definitely, I see the price of acquiring customers going way up. I'm not sure how that, from it connecting to M&A, if you've got an incentive-based platform or a customer acquisition platform that is better than anybody else's, you've got some huge value. And I know that, without revealing too much, I know there's companies out there that have those systems in place that'll reduce the cost of acquiring customers and increase the stickiness of that customer to that brand. So there's real value in those companies. We've seen those pop up quite regularly.
Jim, if I could add to that, there's really a curve in terms of the amount of users that you have. Once it grows past a certain level, those users are much more valuable, as well as the company in general is much more valuable. So it's the order of magnitude. If you have 1 million customers versus 5 million, having that 5 million is going to be worth a lot more than 5 times the 1 million of users that you have. And I think the perfect example there is of the OpenPaint acquisition. You know, they came with all those millions of users on a platform, not necessarily the content, but just the fact that the users were coming back over and over. That was the valuable portion of the business.
Yeah, from a buyer standpoint, I've got big, medium-sized companies asking me what companies are for sale that have 1 million users. What companies are for sale that have 500,000 players? They're not big numbers, but they're numbers. These medium-sized companies want to acquire companies that have players, and they'll do that all day long, which is a new trend. I didn't see and they're coming to me. I don't have to go to them. They really are asking, please give me a list of companies that I can buy that have 500,000 customers, because that is value. There may be no revenue, maybe no profit, but they have customers.
Hello, Dean Takahashi at VentureBeat. Just wondering if you think the social casino craze might sort of be a bubble and that it might blow up soon, or what conditions sort of might keep it going, or versus sort of fizzling out, I guess.
Yeah, it's a good question, Dean. I think it's going to keep going. There's people just don't, that people love gambling. Period. Whether it's for money, people love gambling for money, but they love gambling for fun. So I think it will keep going. I think what's required is a revamp of some of the products out there from some of the major publishers. Some of them are pretty rough. These some of the look and feel and the user interface are very, very rough. And that's where Zynga's probably, won some of the battle. So as Zynga improves their products, these other companies have to improve their products. And I think the level of offering in terms of the quality of visuals, the ability to play blackjack on a smart TV, the ability to play blackjack against each other on an, on an iPhone or whatever in a social environment that looks good, it doesn't feel clunky, is going to be very valuable. So I think it's going to continue. I think it's going to continue a lot.
Hi, on the M&A side, what type of multiples are you seeing on pure play social game companies versus pure play mobile companies?
Alina?
Yeah, that's a loaded question, actually. And there's a few things that we think about in terms of which range of multiples to say and which ones that we're seeing. So the amount of top hit games matters. The amount of users matters. The amount of growth matters even more, right? Because all these companies are typically pretty small, but the fact that you're growing, X percent month over month, that is the biggest value driver. So if you compare mobile to social, they're both getting very high values. And then it just really narrows down in terms of what particular attributes does your company have that drive that valuation. And I know Jim was trying to pin me down in terms of what can I say? What are we seeing? What are you seeing in the marketplace? And it's really, somewhere between 3 times revenues for somebody who's growing a lot slower, who's more established, to ranges 5 times, 7 times, 10 times. And the fact that if we look at these multiples for revenues, it doesn't make sense often if it's a pre-revenue company, if they have great technology. So it could be something like 40 times revenue. That doesn't really matter if it's a pre-revenue company. It's just the value that the buyer finds in the synergies.
Yeah, if a buyer can leverage your technology or can leverage the category of product that you're in and sees growth, regardless of how much money you're making, they're going to apply that model to what their leverage would be worldwide with the customers they have. So if they've got 300 million customers and you're doing a great job, you've delivered a great game, and you're seeing growth rates of 200 or 300% a month, you're going to attract a lot of attention. Other questions? All right, so if you leave us your business card, either with Tim at the back or with Alina and myself here at the front, we will get you a copy of this presentation. We'll get you our M&A report, which includes a section on gaming, and you'll get an update pretty soon on what's going on in the industry. Thanks for attending. Appreciate it.